Good afternoon and welcome to the Weekly Livestock Market Update. I'm Brownfield anchor reporter Tom Stever. Joining us from the University of Missouri, as always, it's livestock economist Scott Brown. Welcome back, Scott.
Good afternoon, Tom. Thanks.
Well, we're going to talk about the markets first. What's been going on with you? It's been a while since we've talked.
Yeah, so still doing a lot of outlook, and there's certainly a lot of uncertainty in these markets when you just look at the growth in supplies, the trade issues that we face today. You look on the pork side, we're trying to see expansion in some of those processing facilities. We're finding labor more difficult. All of those things tend to have folks wondering where markets head as we move forward.
Well, let's tell them about it. What did we do this week? We had cattle stronger.
Yeah, that's right. So, I'll say I think across the board a little bit of strength this week. It's good to see that on all fronts for the most part. We start on the hog side, second consecutive week of another more than $3 increase in cash hog prices. I'm sure producers like that after what's been a tough period of time for them. If we look on the future side, though, those current lean hog futures closed down about $2 this week. On the pork cutout value, it was basically unchanged this week as weakness in hams and bellies really offset some of the strength that we saw in the rest of those primal cuts on the pork side. If we turn our attention to cattle, although cash-fed cattle were basically unchanged this week, feeder cattle were steady to four higher, and really some pretty good demand out there this week for feeder cattle. And on the future side, we really closed the week here quite strong, especially on live cattle. That current June contract closed $3 higher for the week. It's kind of that first indication, Tom, that perhaps we're seeing futures markets start to move towards cash prices instead of the other way around. So maybe some good news here very late in the week. And on the feeder cattle side, that current contract on feeder cattle futures was also $2 higher. The choice box beef price also higher this week, up $6. Perhaps we're finally seeing signs with a little warmer weather in many parts of the country that the grilling season might be finally here and giving us some strength, because we got a lot of that strength in box beef off of middle meats this week.
I don't know if it's the case for you, Scott, but the grilling season really never ends for us.
That's right. It doesn't for a lot of us. It's amazing. But certainly when we look around the country, it seems like we were in kind of a slow start to what's normally seasonal increases in both beef and pork prices as we see a lot more consumption going on.
Yes, that's always good news. The cold storage report is out. There are well, especially if we look at pork, there's quite a bit of pork in cold storage.
Yeah, exactly. So the end of March numbers, when you look at beef, pork, chicken, and turkey, about 2.4 billion pounds of those products. For those that don't keep track of that data all that closely, that's just 9.4% higher than where we were a year ago at this time. So we are growing those supplies in freezers across the board in terms of meat generally. However, when you look at the individuals here for a minute, this is where I think the story gets a little more complex. Beef is really unchanged from a year ago. So I think we're seeing some signs that perhaps beef demand's been relatively good, moving more product as we look at what's been happening on the cold storage side. Yet when we look on the pork side, at the end of March, pork in freezers at 611 million pounds, 12% higher than a year ago, only to be outdone by chicken, which has really been dragging on us here for a while. That was up nearly 14% here at the end of March. So some signs that we have things backing up. I don't want to get too carried away with the negative news there, but it is something we'll continue to watch as we move forward.
Now, the GDP is moving up. There's a little strength there. And, of course, a better economy always bodes well for meat consumption.
Yeah, so we did get out that 2.3% increase in GDP for the first quarter of 2018. That actually exceeded a lot of expectations. There were a lot of folks out there around that 2% growth for the first quarter. It did slow relative to where we ended the fourth quarter of 2017 at nearly 3% growth. But it is good to have positive growth in that first quarter GDP number. I just for a minute like to remind ourselves, so although we've seen a lot of slide in cattle and hog prices as supplies have been increasing, when you look at a kind of a meat demand index, if you will, for both beef and pork, those indexes have been frankly very strong in the first part of 2018. In fact, That pork demand index probably up relative to where we were a year ago at this time, and beef at least nearly flat. So that's frankly good news that we still see pretty strong domestic demand for meat products.
Scott, there's an interesting report that comes out a couple of times a year, the International Livestock Circular, which is out now. What is that telling us?
Yeah, so if you look at what we got from USDA here a couple of weeks ago, and we don't get that often a look at what's happening in the rest of the world in total, and USDA gives us this twice a year shot at that. I'd just like to remind us, so when we look at our own meat production growth here in the United States, after being down in 2014, we really started expanding at about a 3% clip in both 2015 and 2016, and we continued that on in 2017. Yet when you look at the rest of the world, so what's everybody else doing as we're growing 3%? For both 2015 and 2016, the rest of the world was fairly flat in terms of beef, pork, and chicken production globally. So it gave us an opportunity to perhaps expand a little quicker without those supplies becoming too burdensome, because the rest of the world, frankly, wasn't growing. But USDA tells us a couple of things. Number one, 2017, the rest of the world did increase. We're now talking about them being up in 2017 about 1%, and USDA predicts for 2018 that growth will now near 2%. So when we're trying to grow 3% annually, and now the rest of the world's starting to grow that 1 or 2%, that might mean that supplies get more burdensome in terms of what we're doing here in the U.S.
So we'll have to have a lot more consumption coming up here in the next while as well. What's coming up next week, Scott?
Next week, we're going to get a number of reports. We'll get a restaurant performance index out early next week, and then towards the end of the week, we're going to get focused on that monthly trade data, as well as we're going to get a jobs report at the end of the week as well. So those will be the two demand side things that I think will be important for meat markets here next week.
Very good. Scott, we'll talk to you next Friday to get our weekly livestock market update every Saturday morning. Go to our website, brownfieldagnews.com. Click in the subscribe link, and you can also submit questions at that link. Also, you can check out John Perkins' twice daily Brownfield Market Minute with brownfieldagnews.com. Have a great weekend. I'm Tom Stever on Brownfield.